Welcome back to the channel, guys. Today is September the 27th. It's Tuesday morning, and I got a question. Are you someone that's currently struggling in your trading day to day? Not profitable, not successful, maybe you just don't have a solid strategy to use, whatever market you trade that allows you to be profitable, okay? Well, I want to show you a pretty reliable, a strategy, a scalping strategy that I use in my trading each and every day when I'm sitting here trading the ES futures, okay? Now, my channel is packed with probably over 300 videos. If you are someone that's new watching right now, I trace using or around supply and demand. If you don't know about supply and demand, I highly recommend that you, query it or go online, Google it, or whatever you want to do. Watch some videos on it. You can even watch the videos here on my channel. Supply and demand is the bread and butter. It is my cornerstone, or the cornerstone to my actual trading, okay? I am a scalper. Yes, I do not swing trade or position trade, whatever the case is. I only simply look to get into the market, all right? Look for setups surrounding supply and demand, take the opportunities and make my profit and go about my day. I do not like to sit in trades for hours on end or even half an hour. Okay, I like to look for quick setups to get in, get out the market, look for the next setup. So what does that allow me to do? To look for several opportunities, great high probability opportunities in the market surrounding supply and demand, where I can take those trades, capitalize, and move on to the next setup. So today I want to show you that simple, reliable scalping strategy that I use and have discovered in my own trading that allows me to become profitable, allows me to be profitable in my trading each and every day, okay? Now, I've been trading for over 10 years, and yes, it took me about 2 years to really start, really become profitable because, like most traders, I bumped into some brick walls and, I had to kind of get over the hurdles, whatever the case is. But let's go ahead and jump into this, okay? Because I don't want to kind of go down that path. That story that I talk about, my journey, my life story about me becoming a successful day trader, is you can find those videos here on the channel as well, okay? So let's talk about, I want to show you some areas in the market, some basic setups in the market, things to actually look for that will probably help you in your own trading. And it's also around the supply and demand, but first and foremost, you must understand market structure and you have to be able to read and follow price action, okay? But I'm going to minimize this. This is my charting layout pretty much, okay, guys? But the charts that I primarily put the most emphasis on focus on is the 12 range and my 4 range. I like to pair charts together. I want to show you a simple strategy if you are a beginner trader, and maybe you're not even a beginner trader. Maybe you can just add this to your arsenal of strategies, other strategies that you may have, someone that's maybe, experienced trader. But basically what it is that I look for supply and demand zones off a 12 range chart, say for instance, okay? And it could be any higher time frame chart that you may use, but you must have a scaled down entry chart to be able to use, because basically what I'm looking for is structure breaks once price taps into an area of supply and demand on my anchor chart, say for instance my 12 range chart. So in this these examples, I'm using my 12 range as an anchor chart and then the 4 range as my entry chart to where I'm looking for breaks and structures, okay? So again, it all surrounds supply and demand. So let's go ahead, I'm gonna jump into it. I'm gonna show you the first example at hand and how you can trade it using a scaled down approach, moving down to your 4 range chart. Now you can also use, and then I'll show you another way you can actually trade it, because sometimes you may not get an actual structure break on the scale down or your lower time frame or entry chart like the 4 range chart, and sometimes you may miss an opportunity. So I'll also show you just strictly using the 12 range chart how you can tap in, once price taps into an area of supply and demand, what to look for to be able to get into a trade and capitalize on it. Because like I said, sometimes on the 4 range chart, that setup where you're actually waiting for price that may have tapped into an area of supply and demand on the 12 range or anchor chart, but on the 4 range, again, we really are looking for structure breaks once price hits that area of supply and demand. But if the 4 range doesn't give us that opportunity where we see a structure break, then we may miss that play, okay, or setup. So let's take a look here. I'm going to show you. This was yesterday, the 26th of September, yesterday, Monday, okay? And I took several entries yesterday, and I was able to capitalize Just basically scalping and making $1,100 yesterday, a little bit over $1,100. But anyways, let's talk about the first area. Okay, so the first area I'm going to show you. Okay, first let's take a look at market structure. All right, we must understand that. So what we have here, we see that the market is pushing up, making higher highs, swinging, making nice swings to the upside. So it had a big leg here, pull back, nice leg, making higher high here, pull back, making similar lows here, and then breaks higher. Okay, so this is a channel to the upside. Okay, all right. So what we're looking for are basically areas of either supply and demand, like I said, on the 12 range chart. So again, whatever higher time frame chart you may use, I'm not saying like a 60-minute chart or 2 hour, 4 hour, whatever chart. I'm just saying one that you actually scale down to. That it could be a 5-minute chart, say for instance, or it could be a 15-minute chart paired with a 5-minute chart, or a 30-minute chart paired with a 5-minute chart, whatever it is. Okay, but I like to use 2 paired charts together in this example. I'm going to show you the first one. Okay, so price pushes up, pulls back, breaks higher, makes a higher high here, pulls back here. All right, so on the pullback here, what did price do? It made a high here. So when the price started pulling back here, it started making these lower lows and lower highs, breaking structure on the way down. But then it turns back around and starts pushing back up, making higher highs and higher lows, breaking this high right here. Okay, so we've got a structure break right here, which is resistance. Is breaking this area structure at the top here. So it breaks up, pushes up higher. Okay, so once price makes this high up here and starts to then, okay, so there must be some area of resistance to the left hand side or an area of supply, somewhere to the left hand side. Let's see, over here. Yeah, somewhere up in here, price is rejecting this area right here, okay, when it made this high right here. But we're not focused on that right now. But we do know that price is rejecting at some area at the top here against an area of resistance, and we're above this high volume area right here, okay? So, and if you don't know much about how to use volume profile, I talked about that in a video that I did yesterday, so you can watch that. I always talk about sell the highs, buy the lows, and I'm talking about more so in areas because I use the volume profile as a means of confluence. So sell the upper area of a high volume area. Just don't sell, when price gets above a high volume area. I'm saying I use it, I couple that with price action and supply and demand thing, in my trading. But what we're focused on right now is price making this high right here. Okay, made a run up here. All right, then it turns direction and starts to make these lower lows and lower highs. But we gotta be mindful. These areas right here where price made these higher highs and higher lows to the upside. Okay, and took out this area of structure, this area of resistance. It broke structure here, okay? So these areas here, these swings here where prices are making these higher highs and higher lows, there's demand sitting here, okay? All right, and this swing, this last swing to the upside here that it made the final push before it broke structure here to the upside, what do we see happen? Price made a high here, pull back, made a lower low here. Look at all these green candles to the upside. That is aggressive buying. That is a lot of demand coming out of a certain area. So this would be an area of demand sitting right here, okay? So we got a lot of aggressive buying. So that's what supply and demand is. Supply is aggressive selling. Demand is aggressive buying, all right? So when price is now making these lower lows and lower highs, pulling back to the first area, this swing here, where a lot of buying came out of, I want to mark the zone. And how do you mark the zone, okay? The way to I mark my zones, let's move this down so I can grab the tools, all right? Is go to, I use a simple rectangle box. I'm marking from the lowest part of this candle here because this green candle wicked out the bottom. Let's do this again. Okay, right here, and then we just draw it out here. So it is from the lower portion of this green candle, because the green candle wicked below the red candle here, to the upper portion of the red candle, top portion of that red candle, all right? So the moment price taps into that area, okay, this is demand sitting right here. It taps into it, all right? Now, I'm going to show you that there's 2 ways you can trade it. You can trade it throughout the 12 range chart, or what I like to show, and how I like to show beginner traders a simple strategy to where it gives you more confirmation in your trading, okay? It's a scale down now to a lower time frame. Now that price is actually tapped into this demand area, let's move on down to the 4 range chart at this point, okay? And we'll mark that area, the same zone. So this area right here, okay, around 1048, 1050 is that same area right there. On the 12 range, what do we hit? Demand, okay? Now that we hit demand, we want to go down to our entry chart now and start to look for a setup. And what I'm looking for is a structure break, meaning price to break a level to the ups as it's moving to the upside and then pulling back. Okay, so right here, okay, price hit that area of demand. All right, now we see price push up, pull back, making a lower high here, okay, or a similar low here if you want to call it that. Then it breaks higher. So what is it doing now? It's making higher highs and higher lows, stair-stepping slightly to the upside on a 4 range, okay? Now, price breaks structure right here on the 4 range, okay? So what do I want to do now? All I want to see is price to actually pull back to this classified area of demand now. So basically it's like marking 2 areas of demand. You're marking the first area of demand off the higher time frame, your anchor chart, which for me will be the 12 range chart. Then I switch over to my 4 range chart once price is tapped into that 12 range demand, okay? On the 4 range, and I'm making a lot of these videos like this here, talking about supply and demand, zones, the setup and what to do and how to do it and the steps to take. I'll keep reiterating these things because it's how I started this channel, and it's growing because of the fact that people are starting to say, okay, you know, maybe they didn't have a strategy, but now it's actually working for them, and they see how I'm actually how I actually trade and implement this same strategy into my trading each and every day. Okay, so I don't want to get too far-fetched from that. Okay, but anyways, now that price has broke structure here, meaning took out this little high right here. Like I said, we want to see a breaking structure, right? Price breaks this area here, breaks higher. So now we want to mark a demand zone or an area of major support on our lower time frame chart, the entry chart. So this would be the area right here, bottom portion of the green candle. Okay, we'll drag it out to the upper portion of the red candle there. What happens? When price, and all we're looking for now is price to pull back to this area of demand right here. All right. Now, once price taps into that area of demand on the 4 range and it closes green to the upside, I'm long. Okay. Where I'm going to take my long to, back at least up to the high right here. So if I get in right here at 37.08, I can at least take my trade back up here to 37.12. You picked up yourself 3 to 4 points. Easy. Easy on one solid trade. Okay. One solid trade. And how the ES works is every 4 ticks is $50. So if you picked up 4 points, that's a quick $400. How quick would that have taken you? How easy? 10:51. You get it out here at within 5 minutes at tops, and you're up $200. Okay, all right, $200 trading one contract. If that's 2 contracts, then you'd have made $400. So in 5 minutes, if you trade in one contract, $200. 5 minutes trading 2 contracts, you'd have made 5 minutes trading one contract, $200. 5 minutes trading 2 contracts would have made you $400. Sorry about that, guys. Okay, so simply all you're doing is we're identifying key areas of where aggressive buying or selling took place. Again, I'm reiterating that. We marked up the area of demand, a key area where a lot of buying came out of this area, out of the market. Okay, breaking an area of structure right here, pushing to the upside. When price, we mark the zone. When price comes back to the zone, what do? It hits the area of demand on our 12 range chart, anchor chart. Okay, say for instance, scale down to your lower time frame, whatever it is. I use the 12 and the 4. Okay, range. My 4 range entry chart. I want to see a structure break now. Once I see the structure break, price breaks higher. All I'm looking for now is to mark another zone. Okay? Price pulls back to the zone I marked. Once I get a break of a candle, once price taps into that zone and I get a break of a candle back to the upside, I'm long, taking at least back up to the highs right here. Okay? There's liquidity sitting right there. All right? And the next area of liquidity is going to be like right here. Okay, so this is a little swing to the downside. Got a little high right here. All right, and what does price do? Price comes right up to it and checks that area. Okay, so that is a solid way to trade using supply and demand. A simple, reliable scalping strategy that you can use, implement into your trade each and every day, and just look for those setups, and you can make money doing this. All right. Now I'm going to show you another example, another trade that I took, and show you where you didn't quite get that breaking structure on the 4 range chart, but you still can trade it using the 12 range chart. All right. Okay, so you guys ready for this? Let's move on. All right, so the next area I marked up was this area right here. Okay, this is a demand zone, And this happened around 11:45 yesterday, okay? So, as we saw before, as price, I was talking about this, with price was making these higher highs and higher lows, there were areas of demand as price was stair-stepping to the upside that price was leaving behind, okay? So, that first area we just talked about was right here. Price continues moving lower, okay? Here's a little area of demand right here. What do we see here? Price pushing up, okay? Pulling back right here, all right? Breaks higher right here, okay? All right, so it's making a swing to the upside here. Now, this area is classified as a demand area because this swing right here, okay, is what we classify as a supporting swing within a bigger swing. So this is the bigger swing right here. Price pushing up, pulling back, breaking higher, but we have a swing within a swing. Price pushing up, pulling back, breaking higher. This here is the area of demand. Again, you mark it. Lower portion of the green candle that wicked out there, you see it at the end of the wick, to the upper portion of the red candle, if you can see it here. Okay, green candle, red candle. That's how I mark my zone. Okay, what do we see? It's a waiting game at this point here. Price eventually comes back down. 11:45 taps into that same area. Okay, it's a demand zone there. What is demand? Aggressive buying. See this? Price pushed up here. Pulled back, pushed up, okay? All right, pull back, lots of buying coming out of here. A decent area of demand, okay? All right, and what's going to happen there is the market is going to come back there because the banks, institutions, when price is moving away from this area, lots of orders, they were trying to fill orders, and they probably, most likely they could not fill all those orders. So when price comes back to those areas that you can classify or see as areas of demand in the market, what happens then? Well, the banks are going to try to fill the rest of the orders that they have on the table, okay? So you can look to capitalize on that to move in the same direction again with them, all right? And that is going up. So when price comes back here to this area, what do we see happen? It rejects and it moves up. But I'm going to show you this because what I was trying to explain was that we're going to switch over to the 4 range chart now because you're probably asking, okay, well, you show me the demand zone on the 12 range. It's in it or tapped into it. Is it going to show us the 4 range now? To look for that structure break, let's go to it. I'm going to show you that not on all instances will we get that set up, but if you want it, we're going to go to it. 11:45 right here, okay? All right, 11:45 right here. Price tapping into the demand zone. Now, if you're trading just paired up with the 12 and 4 range, or 15 and 5 minute chart, or 30 minute 5 minute chart, or an hour and 5 minute chart, or 60 minute 5 minute chart, whatever it is, okay? Whatever two charts you're pairing together. And you don't get that, you wait for that setup or whatever the case is, a structure break on the lower time frame, and you don't quite get it. Okay, well, sometimes you may miss an opportunity. Okay, and that's fine, because that's what trading is all about. Sometimes that if trade setups aren't clear enough, we just won't take them, whatever the case is. But let me show you, because I did mention that. For me, if I was trading off the 4 range chart and I was a beginner, I probably would, and I was looking for that structure break, I probably wouldn't trade this trade. But you also have to be mindful of what's taking place here on the 4 range. And the reason why I would take this off the 4 range, I'm going to explain to you, okay? Or solely off the 12 range is because two things. Even though we don't get a structure break here on the 4 range chart, okay, meaning we're looking for that price to start making a lower low, a higher high and a lower low to make a higher high and breaking structure here, okay? Meaning breaking through an area of resistance. We don't get that. But what do we get? We get a W structure. And you guys probably have heard about shorting M structures and buying W structures, right? Well, we got an M here at the bottom. An M is like a little zipper where price is moving sideways. It's a slight consolidation before price makes a move to the upside, okay? In this point right here. All right, so price makes this little W right here, and then the moment price basically pushes down, okay, pushes up, pulls back, and breaks this red candle right here to the upside, I'm going long. Okay, I'm going long right here at 36.83. Now let's look at it from the 12 range chart. All right, now for me, I could trade either. I'll trade it either way. Either when I see this rejection of price making this W here at the bottom, or basically price below this 12 range chart up here. Basically, when I see price break above after tapping into the 12 range demand area, breaking above right here, meaning breaking above the body. This green candle closes right slightly above the body of the red candle. I am long. And where am I going to take the long to? To the area of liquidity above, right here, the top right here. So you get in here at 36.83, excuse me, 36, pretty much 84. Again, on the full range, I think it was, yeah, 83, whatever the case is. So it's, you know, within a matter of a couple of ticks on both charts. Get into the trade, take it back up to the high up here, okay, right here. So that's, if you got in on the 12 range chart, that's 10 points right there. 10 points. Okay, 10 points on one contract is $500. Two contracts, that's $1,000. Okay, and you're talking about if you trade out the 12 range chart, got in at 11:45, and get out here. What time was that? About 15 minutes or so. You know, 12 minutes, whatever the case is. Make you $1,000 trading two contracts. If you want, just if you don't have that type of brokerage, side kind of capital in your brokerage account, whatever the case is, and you're trading with one contract or one lot, there's nothing wrong with that, guys. Because trust me, I was trading one lot, one contract for years, okay? And still to this day, I have plenty of capital in my brokerage account. But the thing about it is that I'm comfortable trading two contracts. You know, I don't, I haven't scaled up, and I'm not saying I won't, but right now I'm just comfortable and just moving at a steady pace. I'm trading two contracts, and I'm profitable. I'm not, I'm not stingy or greedy or whatever the case is, so I'm okay with the way I trade. All right, but anyways, yes, price breaks 80. Say get in at 84, get out at 36.94. That's 10 points right there. Okay, and these are setups that I took yesterday. Another one was down here I took yesterday. Okay, as well. And I think it was another area. Yeah, another area of demand right here, and that was from the 24th. 23rd, okay, right here. All right, so pretty much the trades I took yesterday, most of them were off areas of demand, to be honest with you. But that's how I trade it. It's basically either, like I showed you, look for a structure break, and I started making videos, basically showing paired charts like the 12 and the 4, and then once you get that, tap into the area of supply and demand on the 12, and then move over to your 4 range chart, whatever the case is, and look for the structure break and then the pullback. A lot of people have caught on to that, and we got a lot of traders in the Discord that they are thankful for the videos and me showing the way I actually trade, using either 12 and the 4, whatever the case is. But I always like to you start with a scale down approach, always. But it's a simple strategy, simple, easy, reliable strategy that you can use in your own trading. And it's just basically, like I said, wait for price to tap into an area of supply and demand, and then once price is in the area of supply and demand, scale down to your lower time frame, look for a structure break, look for the pullback, rejection, go either short or long. That's all it is, okay? So let's see one more thing. And another thing I want to talk about too, not in this video here, but it's going to be probably in another video, maybe tomorrow, but high probability zones, okay? That's something that I want to tap into and have a discussion about, because there's a such thing what's called low probability and high probability trading, especially surrounding supply and demand. So we'll talk about that as well, and what makes and how to classify an area to be either low or high probability. I kind of touched base on that in another video. All right, before we get off here, I wanted to show you this area of supply and how to trade it as well. Okay, so here we got price, basically making a run to the downside here. This is from September the 20th, moving into September the 21st. Then it starts to make direction back to the upside, making higher highs and higher lows. It hit some area to the left-hand side here. Let's see. Let's move this up here. Let's see. Right here. This area here, which is, area of resistance right here. Okay, so either way, what happens here is that what I'm trying to show you is that price pivots, turns direction, starts breaking structure back down to the downside. Okay, so we made these higher highs and higher lows with this leg to the upside, this run to the upside. On this move to the downside, what is it doing? Okay, it made a high here. It's taking out structure as it breaks down below it. Took out this area right here. Okay, all right, so as it broke structure back down to the downside, what did it do? It left behind a good area of supply. Why? Look at all the aggressive selling that came out from the top here, back down to the bottom right here as it makes a run to the downside right here. Taking out this swing, there's a support sitting right here. So it's taking out structure right here, moving to the downside, aggressive selling. What do you think is going to happen when price comes back up here? That's an area of supply. So take a look. It eventually does. It comes right back to that area right there, taps into it. And what do? Two things you can do. You can take the trade back down to the low right here where there's liquidity sitting at, okay? All right, off the 12 range chart, and that's probably how I would do it. We'll take a look at the 4 range too, because again, I want to show you guys, both ways to actually, how you can actually trade this. And for beginner traders, if you notice that you get a structure break off the 4 range chart, once we tap into that area of this area of supply, then it's a great opportunity for you guys because you kind of, it helps build some sense of direction and looking for the setups, and kind of gives you a step 1, step 2, step 3 type plan to put into action. Okay, so price pulls back right here. All I'm looking for at this point here is a break of a candle to the downside. So once that red candle closes below that green candle right there, the body of it or the wick of it, I'm short, taking it back down to liquidity down here, the lows right here. Okay, so if I get in, price closes at say 38.95, I'm in there. I want to take it down to at least right here at 88. So what did I say? 38.95 down to, that's 7 points right there. Okay, so let's look at that for on the 4 range. That's around 12:45. Okay, on the 21st. Okay, so it's actually at 12:36. Okay, let me go to that same area. Where's it at? On the 12 range. Lost it. Here it is, right here. Okay, right here. All right, so that was at 3,900, and we're hitting up against a round number 2. So, and above the top volume area. So sell the highs. Okay, so let's bring those 2 areas into perspective here. All right, price pulls back to the supply zone here on the 12 range. Here it is on the same area right here on the 4 range is that area right here. Okay, all right, so the supply zone will be right here. Let's mark it right here. Top there, that red candle down to the lower portion of the green candle right there. Okay, price taps into it. Same area right here. Now, what we're looking for now on the 4 range, we're looking for a structure break to the downside. Now, price break structure on as it's moving to the downside. Okay, we've had a push up here, pull back, price broke higher. Break structure as price is moving down, takes out this low right here, this little micro low. Does it come back to it immediately? No, it does not. But this, once price breaks structure, now you mark your zone on your 4 range, which would be right here, in this area right here. Price takes a little while, but eventually it does come back to that zone if you marked it right here. Okay, let's go ahead and mark it. It's going to be right here. All right, taps into it. All right, once you get a break, once you see that red candle close to the downside, go short. Go short, okay? Got a small little micro swing here, but that's not going to stop. We want to take price back on down to, let's see here, right here. This would be your area of support right here because as price is swinging to the upside, we're taking our structure right here. So at least take price back down to this area right here. So if you got in here at 99, at 38.99, take price on back down at 96. Now, on the 12 range, you get a trade and start out the 12 range without waiting for the structure break. But again, I'm showing you guys how to pair 2 charts together, looking for supply and demand, and then switch over to your lower time frame, looking for the structure break, and then the pullback to that area. If you're a beginner trader, because it's a great, reliable scalping strategy that you can use or implement to make money in the market. Now, for me, I can also trade off using this 1 chart here. Once we tap into that supply zone off the 12 range chart, and I get again, like I said again, the break of the candle here at 38.95, I'm taking it back down to the lows right here, liquidity. All right, so that's pretty much it, guys. Just want to wrap it up to kind of maybe reiterate, to maybe help some individuals that may have questions out there. But that's all I have for you guys today. If you're a first-time viewer, please take the time to go ahead and subscribe to the channel by clicking on the subscribe button down below. Click on the bell. Make sure your post notifications are turned on. That way you'll never miss one of the uploads here on the channel once I post, and I post daily pretty much. If you are a subscriber already, you guys already know what it is. Thank you for watching the video. Thank you for subscribing to the channel. Thank you for being a loyal supporter here on the channel as well. If you're interested in the Discord, guys, and you are a newcomer or first-time viewer here on the channel, simply find the link to the Discord down below in the description portion of the video. Click on it. The Discord is free of charge. Just Click on it, invite yourself in. The Discord is a great community to we as fellow like-minded traders come together. We talk about the markets each and every morning. I'm on there. We have a little bit over 300 community members on there now. We talk about levels and zones we're looking to trade from. It's just a great wholesome community where we converse each day. If you got questions, somebody's got the answer. If it's not me, someone else, or whatever the case is. But just join for free. Find the link down in the description portion of the video below. Take care, trade safe, and see you in the next video.